What's going on, everybody, and welcome to the video. In this one, we're talking about what is going on with AMC stock and ape stock, why the two are being so volatile right now, everything you need to know broken down in a very simple way. I even got some drawings to make this super simple for you to understand, just in case you don't. But if you're new to the channel, make sure to subscribe and turn on post notifications so you do not miss out on any of my future content. Let's go ahead and get straight into the video. So as we can see, AMC stock is down 14% today alone, and ape stock, the preferred shares from AMC that they sold out in a dividend back in August, is up 66%. The stock had gone up an incredible amount in the pre-market trading, but let's go ahead and kind of talk about what is going on. So first up, AMC stock sinks after reverse stock splits proposal, and this is what caused ape stock to rise. So it sank as much as 70% after the open today, after the country's biggest cinema operator proposed a reverse stock split and a conversion of its preferred equity units into common shares. It even got halted early for volatility in the early minutes of trading. What they want to do is it wants to hold a special meeting for shareholders to vote on a reverse split of AMC shares on a 1-to-10 ratio. So let me kind of explain what a reverse stock split is in case you don't know. So usually what a stock split is a company taking, for example, a very high price stock and then offering more shares into the market but bringing the price down so there's not really any changes in market cap or anything. What a reverse split is the exact opposite. It's taking a smaller price stock and converting those shares into less shares outstanding and making it a higher price stock. So for example, I'm just doing simple math numbers. AMC has about 500 million shares outstanding and the stock price is about $4.50. With a 1-to-10 reverse split, you would take that price and you would multiply it by 10, so then the new stock price would be about $45 a share, and these shares outstanding would be divided by 10, so there would only be about 50 million shares outstanding. So now there's less shares outstanding, but a higher price per stock. And Adam Aron did say he wanted to do this mainly because to keep this big company, the biggest cinema in the world, in the United States, from being a penny stock and not letting Wall Street have that leverage on them. So if approved, every 10 shares held will be combined into one. So if you held 100 shares, you would only hold 10. If you held 10 shares, you would only hold 1. That's how this reverse stock split would work. So pretty much earlier this week, AMC also announced that it so far has raised $162 million through the sale of their ape shares and slashed debt by about $180 million this year, which is a very bullish thing to see for this company. On Thursday, CEO Adam Aron tweeted this. Also, a company as distinguished as AMC shouldn't let Wall Streeters wishing us harm drive us into penny stocks. So that is another very, very big reason as to why Adam Aron in this company wants to do this reverse stock split. So on Thursday, they did also announce that it is reducing its outstanding debt by $110 million through the sale of their ape units to Antara Capital, a current company debt holder, at an average price of about 66 cents per share. The ape stock has been absolutely pushed to the moon right now at $1.13 per share, up almost 65% alone. The stock is doing incredibly well, seeing a lot of good stuff happening just for ape shareholders right now. But if this were to happen, if this reverse stock split were to happen, no ape shares would exist and they would all be kind of converted into AMC stock, which is not doing too well right now. Over the past month, down 38%, and over the past day, down 14%. But still, this is nothing. I think that the movement, everything is still looking pretty solid for the company. Furthermore, another thing I wanted to point out, Thursday morning, Aron took to his Twitter account to tell retail investors that reverse stock split would reduce the number of AMC shares and so boost their price as they continue to fall in value. Just wanted to point that out again. These shares outstanding would decrease, so this will make the stock, hypothetically, this will make the stock more volatile as there's less shares outstanding. Just because, less shares outstanding does make a stock more volatile in most scenarios. So keep that in mind. But to show you kind of a few more things. So right now, here's a few things I wanted to point out. The short float on AMC is about 19%, which is very, very high. Shares float is 515 million. You divide these numbers by 10, the shares float, the shares outstanding, and that's what you would get with a 1-to-10 reverse stock split. On ape right now, it has about 531 million shares outstanding, and those would kind of just go away with an 8.3% short interest. So this is very interesting news to say the least. I still believe AMC, if you just kind of go ahead and look at their news, they're catching a lot of news recently, in the end of middle November. They kind of had a little bit of a dry spout, but they're catching up, November 14th, co-branded credit card, and then the 19th, saying strength coming in with new movies, and then they raised more than 162 million through the sale of AMC preferred equity shares, and then AMC Entertainment announces 110 million in equity capital raise. So this is a very big thing to see. So the company is catching a lot of attention, like I said, but nevertheless, I do think there's a lot of things that are going to go into play. Is this going to officially happen? We'll see. Going to be very interesting to see how this all turns out. But that is going to wrap it up for this video. If you did enjoy it, make sure to subscribe to the channel and turn on post notifications so you don't miss out on any of my future videos. Thank you again for making it to the end of this one, and I will see you at the next video.